Welcome in Kim Forrest. She's CIO at Bokeh Capital Partners, and Bryce Doty is Senior Portfolio Manager for CIT Investment Associates. I'd like you both to just react to what we heard from the senator first, if you don't mind, Kim. What's your thinking on the fate of the next relief bill at this point?
Well, I'm really glad that both sides have come to the table to address the needs of the people that they are supposed to represent. I have a soft spot for people that work in the restaurant industry. I actually put myself through undergrad as a waitress, and I cannot imagine what their lives are like right now. So I am encouraged that we're back at the table, finally.
Right. And Bryce, it seems like the market is very encouraged as well. Look at some of the reopening names today that are really taking off, some of the airlines and that sort of thing. Are we right to kind of price in this getting done? Because, you know, the other thing I was thinking as we spoke to the senator is, doesn't it depend on what ends up happening with the Georgia results? You know, doesn't it depend on what we think the makeup of the Senate will look like in another month's time in terms of whether Democrats want to get a deal done now or later, and same for the other side? Do you think the market's right to move so much on the headlines this week?
Well, there is a lot of posturing going on in Congress, and you're right, there's so many things at stake and up in the air with what could happen in Georgia. And neither side really wants to bank on that outcome. So I think they do want to get something done sooner rather than later. There's an additional sense of urgency just from how bad things are getting. As the amount of shutdowns stack up, you know, it becomes more and more imperative that they do something. And it's interesting when you ask the senator the question, you know, how do investors gauge the likelihood of a deal getting done? And I don't measure it by what they're actually saying in terms of like $600 a week versus $300 because they're just, you know, kind of bludgeoning each other politically. But what I use as a gauge as to the likelihood of it happening is the intensity of their words. And as you saw from the senator, I mean, they're intense. It's getting ramped up. So I think that the market is correct in pricing in some stimulus. I think it's closer than ever, just based on the intensity of the discussions. When no one's talking to anyone or saying anything, that's when the market shouldn't be pricing anything in. But at this point, I think that they're finally going to do something.
All right. So, Kim, give us some plays then. I mean, one of the areas of relative weakness has been big cap tech since early September. As we talk about more COVID relief, as we talk kind of about next year, what are a couple of places or ways that you think people should be positioned to take advantage of what 2021 could bring?
Sure. Well, 2021 is just part of what I invest in, because I usually look out a much longer time frame. 3 years is a minimum. But I do believe there's some trends that are going to help us in 2021. That longer-term trend still is 5G. We have a worldwide rollout, which is really hard for me to say. But we have this big rollout that it is going to drive not just new handsets, but it's going to drive capacity. So there is a lot of places to invest in that value chain. And I look at all of those. The easy places are semiconductors, because that's what moves zeros and ones around the world, whether it's on 4G, 5G, or a regular phone network now.
Yeah, and we won't go into Intel right now, but I know you like Xilinx, you like AMD. Also, you like Elon, if you're ELAN, if you're looking for kind of a healthcare play with pet exposure.
Right.
And so a couple of other kind of bigger picture trends there. Bryce, quickly to you before we go. I think it's interesting here. You're saying you want to buy everything that the Fed hasn't been buying so far this year. What do you mean by that? Yes.
So they're buying bonds and indices. They don't buy bonds, let's say, that are part of a $150 million deal. Pretty liquid, but not a big enough deal to be included in an index. So those bonds have 0.5 to 1% more yield than the bonds that the Fed has been buying. So it used to be in April, you buy everything the Fed's going to buy. You know, you kind of front run the Fed. That trade is done. Those bonds have been bid up. They're way too rich. So there are a lot of bonds that don't qualify for indices, like taxable municipals. That's that whole sector. You can get more yield on those bonds than an equivalent rated corporate bond for much lower credit risk. So there's a lot of different things. And you know, we think inflation's coming back. That's going to be a big theme in 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.